and we are streaming and we are live from Las Vegas. It is time for Coffee Hour with Greg, and here I am with my. I actually have tea. I've already had two coffees already, and I probably don't need any more. Right. So we're gonna get started in just a couple of minutes. I'm just gonna let people know in the various. If you're following me on Facebook, you can tune in coffee hours with Greg, right? We can get you guys here who are on Facebook and who are looking for. Here's a give you the link, and here is coffee hour with Greg starts now. Yeah, here's the link, and then at everyone. Okay, yeah, and we'll get that out there. Get your link and headline, and then we'll go ahead and post that there and in our school community as well. Make sure that you are connected. We are live with Coffee Hour with Greg. And so good to be with you here. Happy Friday to all you guys. And boy, it's been a really, a wild week. I wanted to, send out, be safe out there. There's a winter storm underway. You're probably already under some snow and some cold. And we're going to talk about, how you can possibly trade that, right? So awesome. Let me go ahead and close this up. Again, welcome to Coffee Hour with Greg. We're going to have a great show today. We're going to talk about the taco trade and Greenland becoming the 51st state. Trump getting what he wants from Greenland. Also, we're going to talk about how that impacts the markets. Also, we're looking at a recap of the trading for this week. We'll go through my trades, see what I did right, what I did wrong, what I could improve, and also answer any of your questions. Okay, so this is Coffee Hour with Greg. So good to be with you here today. And for those of you who don't know who I am, I'm a 30-year trading veteran, former Wall Street Currency Analyst. I worked for the world's largest forex broker dealers in the world, and I created a system called the Pip and Run Forex Scalping System, which I've been using for over 20 years to generate millions of dollars in returns for myself and for my students. And so we're going to give you the opportunity to be able to find out more about what we do at Elite Traders University. If you stick to the end, I'll give you a free master class so you can see how we generate the profits that we do. Okay. So let's go ahead and start with the recap for the week. And we'll go ahead and pull up my statement that I have, and then we'll go ahead and share that and walk through that. Okay. I'm going to make sure that you mute your mic. And nice to see Jay in the room, a VIP in our live trading room, a trading extraordinaire. Very proud of him going live and crushing the market. Right, nice to see you. And also in the beautiful state of Nevada and Las Vegas was a balmy 51 degrees outside. Let me go ahead and share my screen, and we're going to share entire screen, and we're going to share, and we'll share some sound as well. Okay, all right. So when we look at trades, we did pretty well this week. In fact, we ended up doubling this account, this $5,000 account, over a period of the week. Then we started the week off strong with a couple of wins, and then we had a couple of losses. And we just basically traded gold. I see there's €1 pound trade as well. And what I'm going to do is I'm going to bring up the charts too to show you. No, our entries. In fact, we are looking at gold now hitting a new record high, 4,981.61 as we speak, right? And so we have no, it's a roaring uptrend, guys. We did have a sell off earlier, based on what the taco trade, right, of the Donald Trump. What happened was, we're trying to, U.S. is trying to get a hold of Greenland for a number of reasons, strategic reasons, from military reasons, for economic reasons, as far as rare earth minerals, and also to deter China and Russia from taking that territory. It's an independent, it's a independent territory that's a Danish territory. But when we have an agreement, U.S. has an agreement, a 1951 military agreement. So they're basically expanding that agreement. But in order to get to that point, to expand the agreement and to grant control over that territory to the United States, that he had Trump enacted tariffs. It was going to trigger February 1st a series of tariffs and punitive measures against any country that would oppose, mostly the NATO nations, our allies, the U.S. allies, and those were going to be severe tariffs. And anytime Trump talks tariffs, a couple of things happen. And what happens is we see what we see is an increase in the U.S. dollar. The dollar starts to rise with the with the talk of higher tariffs, and so and consequently, we would see when the U.S. dollar starts to rise, we also see we also see the rise of the U.S. dollar. Okay, so that's what's usually happens. And let me go ahead. I'm bringing the chart over right now. Okay, so this is the chart, and this is the U.S. dollar index, and we can see that we're going to go back to a daily chart, and we can see that actually we're going to drop it down to a 4-hour, and you can see as we were ramping up into when Trump got to Davos, Switzerland, we saw a rise in the U.S. dollar up to the 99.49 area, right? 99.49 was a significant Fibonacci retracement area. We had from a high that we had back in November 5th, 2025, down to the low of 97, say 73 abouts, right? And so we basically rallied right into the 61% retracement, 99.3669, 99.36, yeah, 99.36. And we saw after the agreement, when Trump called off those tariffs, because the Europeans basically gave Donald Trump what he wanted. They came to an agreement. The Danish prime minister said, hey, okay, you already have an agreement, the 1951 agreement. We'll expand it to give you territorial rights for military and also rights to the minerals, and all the NATO allies access those minerals. And so Trump agreed to remove the tariffs. And when he did that, when we started to see a decline in the U.S. dollar, right? So we peaked out on the news, and then we can see how this is actually governed by the news and how it actually ties in with Fibonacci, which is part of our course pip and run strategy, along with some other things, though. So we have the U.S. dollar index, and if we go ahead and look at gold, XAUUSD, we can see a similar pattern on a smaller scale. I'm going to remove the arrow, but we just saw basically, I'm going to drop it down to a 30-minute, and then we can go and we can see that we had that a similar rise, a double top formation, and price dropping right? Uh, right in line with what was going on in Davos. And then when we got the announcement that there was going to be an agreement about Greenland, the tariffs were rolled back, and what did you do? We see a rise in gold, right? Gold uh, was rising. Okay, and see, okay. So we can see that happening, and not just gold, but other assets as well, especially Aussie dollar. That's been one of our great trades that we took as well. But basically, the fundamental backdrop of what was going on in Europe with this Greenland deal caused this rally in all the euro, same move, and then the pound, the same move as well. GBP USD, right? Just spiking up, right? Tracking the stock market to new highs, and also tracking the indices, Aussie dollar, especially nice trending move. Basically, what we call a risk on trade. And anytime we have risk on, it means if the dollar sells off, people will move from dollars into riskier assets like the euro, like the pound, like the Aussie dollar, like gold, like oil, like silver, and you can see all the commodities are rallying as well, like oil, right? Everything rising, right? Right. We've got oil breaking out to some new highs as well because it's a risk on trade, and then but right now, the Dow is down 233 points, 49,151. And it's Friday. After a big giant run like we just had, we will usually see some type of a pullback. Right? If we look at the Dow Jones Industrial Average, all right, I think I have under indices. Right. So we can see that we're having, after this giant rise that we had, the big rally on yesterday, we see some profit taking. No three-wave ABC correction against the trend. Nothing to really worry about. We still have a massive uptrend. We're consolidating. There's some accumulation, distribution in this area, right? Sideways consolidation after a big run up, right? Big run up, sideways consolidation. Whether look at a breakout above 49 675 or below 48 293. So it's very important as traders to be able to look at economic data, look at monitor to news. Don't just stick your head in the sand and think that technicals are going to bail you out, right? Because there's going to be big underpinnings in the picture, and one of the big underpinnings is in the metals market. And we talked about the story of silver. A lot of banks being short silver, and they have to cover their shorts. And what we have seen, we have silver at a new high, $101 an ounce, which is incredible that we would see silver to break the $100 mark. This is an all-time historic high. And let me go ahead and then share that screen with you. All right. But this is and so we have a fundamental picture, a fundamental understanding that, hey, metals are going to go higher as the dollar starts to decrease in value. And we can see that, and I was telling you guys about silver. I wrote several articles on silver. So make sure that you subscribe, become a subscriber to our school group where I post many articles there, and also get on my email list. And so I can get those articles out to you. At least we won't spam you. We send you, one article a week. And if you like it, come to school where I post actually 5 articles a week. And usually they're trading ideas with a fundamental story behind them, because that fundamental story is the foundation of, of, the story behind the move. Okay. Traders and institutions are looking at stories, right? And those stories are revealed in the technicals. They form the backdrop. And I told you about the accumulation, the needing to buy back silver. And I was very happy that my niece, she got her, told my family, told my friends. I was telling from shouting from the housetops, buy silver, buy silver, buy silver. It's got to be over 100, and it was 72 not too long ago, guys. And look, we have consolidation, accumulation. Once they accumulated all the orders between 90.19 and 95.64, we got a breakout, and now we're at an all-time high of $100.75 per ounce of silver, and that's incredible. And so, and there's forecasts. I have projections for $400 silver, and we've already hit 100 already. So there's still time to get back in this trade, and it's the debasing of the currency. It's basically the erosion of 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 the U.S. dollar, and basically going back to God's money. God's money, what they trade with in the Bible, they didn't have paper money or dollars, right? They had gold, they had silver, they used hard assets, or they bartered sheep, cows, and goats, right? So it's very important to because just think, if you had savings in 2020, your $10,000 in savings is worth $8,000 now. Now think about that. You saved your money, you put it in the bank, and you're getting 2-3% interest, maybe 1% interest, depending what bank you got. And then 5 years later, you have $8,000 in buying power. So when you save money in cash, cash is the position, but you got to understand that most billionaires, millionaires, even myself, we don't keep more than 10% of our net worth in cash. We usually have, the rest of that money invested in hard assets, or assets that are making money, or businesses, or stocks, or something that's going to grow with the inflation. All inflation is, they talk about inflating, but really it's the decreasing of the buying power of the dollar. Okay. As the dollar shrinks in buying power, everything relatively becomes expensive. So think about this. You go back to 1900 and you look at the Sears catalog, which was a major catalog back then, right? And you could buy a suit for $1 or $1.20, right? And that was backed by, the dollar is backed by gold. So a gold coin could buy a suit, right? So you fast forward to 2025 and get a great suit from Prada. What's it going to cost you? It's going to cost you what? $4,000. $4,500 for a Prada suit. So what has happened here, right? Has everything gone up, or really our buying power has gone down? And so it's going to get worse before it gets any better. And making more money can help, but where you put your money is going to be most important, right? And if you put it in, electronics and shiny objects and the latest fashions and don't get me wrong, buying stuff. I like nice stuff, right? Too. I like nice watches. I'm not wearing one right now, but but the key is that you want to put your money into something that's growing with inflation, and trading because everything is a trade. We talk about XAU, USD, or EUR/USD, you're trading dollars for euros, you're trading dollars for gold. But guess what? MILK/USD, you're trading milk for dollars, or no, no, video camera, not buys video cameras anymore, right? Big screen TV/USD, you've traded USD for a big screen TV, right? You've traded your dollars into an asset, but you want to trade your dollars into an asset that's going higher, right? Not going lower, because you can accumulate a bunch of stuff and be completely broke, or you can create wealth and generational wealth by actually accumulating and buying assets that are going higher. And we are in an asset. There's something called the CRB index. CRB. I'm going to show you that. CRB. Okay. I gave that ticker symbol. It's a really long symbol. The CRB index. And did we bookmark that? Let's see. Okay. Okay, I've got it right here. Okay. Okay. So this is the CRB index, and it's the Thomson, because they put Thomson Reuters in front of it. It used to be CRB, this plain old CRB index. But you can see this plots all commodities: lumber, gold, coal, oil, natural gas, and we can see that it is rising in a pattern we call a bull flag. A bull flag starts with a sharp rise up, and then there is a consolidation that makes it look like a flag. So it's a bull flag, meaning that it has a tendency to go up, right? And this consolidation or accumulation usually indicates that the price, we will get a breakout equal to the projection, right? And what does this mean for you, the average investor, is that, commodities are going to go up. And so whether it's your unleaded gas, like what's going on in California, they're closing down the refineries. And so now we're going to looking at $8 gas, right? And also it's going to impact Nevada, Colorado, Arizona. And so they're going to have to build out pipelines from Texas to these other states, because California wants to go green and go electric. And, that's why I moved out of there long ago. I saw the writing on the wall back in 2005 and got my family, and we moved to Texas, right? Because their energy policies are going to push prices up, and all commodities are going to go up. And what are you going to do when gasoline gets $8 a gallon in the West Coast? And then you also have the energy grid in the East Coast being impacted, right? You can use these. I mean, these are probably, Greg, these problems sound really bad. It's kind of negative, but in Chinese, the symbol for opportunity and crisis, the flip side is like, the symbol for crisis, you turn it on its head, it's opportunity, right? It opens up opportunity. These are opportunities to make money and opportunities to offset what that's going to impact your pocketbook. So if you have, you travel and you use a lot of gas, well, guess what? You can look at the CRB index and say, look, gas is in here. Why not get long natural gas? Why get long REBOB, which is unleaded fuel gas? Okay, that's what I meant. But any of the energy or a company that will actually that's building pipelines, get into like companies that are supplying natural gas. Natural gas is another market that has been spiking, and we're probably going to start trading that next week. because all of those commodities are traded against the US dollar. And as the US dollar falls in value, these commodities are looking for a breakout. We're just consolidating. We're seeing higher prices on some of these commodities. Not right now we're drill baby drill right now, but when at a point we're going to see a breakout and an accelerated move like we saw here, we'll see a similar accelerated move in these commodities, and that's going to create more inflation. And you can sit around, you can wait for the government to do something about it, or you can take control yourself, right? Because what we saw here, right, we from 2020, and that was the 9% inflation we saw. Well, look, we're going to see a repeat of history. We look at charts. People who fail to learn from history will face to get be hit by it again, right? So we're looking at a break in the CRB index, right? And so that's going to drive the price up of cattle, whether it's your beef, whether it's going to be your oil, whether it's going to be your natural gas. All those commodities are set to move much higher. Okay, and so you need to have a plan to offset that. Okay, so we can offset that through buying precious metals like gold and silver physical. I mean, you can go to Costco and actually get gold, right? You can buy silver too. And right now, in 1933, something happened very, very mysteriously. Well, not mysterious. It was they closed the gold window and they confiscated everybody's gold. Why? Because everybody was running to gold. And so if we have a run in the markets, we could see something happening where the government has to step in and do something, right? Because if you go to like even historical Germany, the Weimar Republic, inflation was so high that they had these wheelbarrows of money, the stacks and stacks of money, where they actually had to, uh, take wheelbarrows full of money to buy a loaf of bread or to buy an egg, right? And so we're getting a reprieve right now because we have an offset of the energy prices are actually, you go to the gas pump. I think I paid $2.96 for a gallon of gas here, and I think it's probably like maybe $1.80 in Texas somewhere, right? So if things are cheaper due to transportation costs, just think what will happen when those costs start to rise again. Now, when you're looking at natural gas futures, we can see a sharp move, an extremely sharp move. Oh, let me get rid of my get rid of that. Okay. And okay. All right. We had an extremely sharp move in natural gas due to the winter, the unseasonably cold winter that's coming in. I wrote an article about that as well, showing that for the most part we had a warmer than average winter, and then all of a sudden we had this Arctic mass, and look, the price of natural gas has shot up, some 20%, and we were at 3. Wow, we were at 350. Now we're at 5. This is tremendous, right? I mean, yeah, we went. I mean, just straight up, right? And so, again, as part of the CRB index, we can see that we were basing. You see the base of natural gas accumulation, and then we have a structure change. We have higher lows in price, as there's an institutional accumulation of price, then a breakout, test, pullback, and we can look for an extension, and we can see that the next stop for natural gas we can see is $7, and then we look at 747, 770, and our old high is $9.88, right? And then there's a gap that needs to be filled over here on this side, and you can see that we had this gap down in price, And right now, price is filling the gap going the other way, right? So we can see a sea change in energy prices, and we're getting a short. We had a little reprieve falling from highs, but now we're with this colder winter, we're seeing this big move. So it's very important to look at the commodities. If you can just look at if you really want to learn how to understand technicals and how they tie in fundamentals, I would advise you to go to elitetradersuniversity.com. There's we have a wonderful get on our mailing list right there, elitetradersuniversity.com. I have an income boost ebook right there, and the blueprint is a great way to learn and profit from the forex market. Get in our mailing list and you get free access to the ebook. Check out our masterclass as well, because you can find out how we can actually we can forecast and look at the markets with greater clarity as well. And then you can learn from our articles how to interpret the news and recognize these opportunities. Okay. So, and that's what drives, as an analyst, a former currency analyst at one of the world's largest forex broker dealers in the world, I worked for FXCM. My job was I was assigned the euro. I was a euro guy, and it was the hardest currency because it was composed of multiple countries. When my friend Walker got the Swiss franc to report on, and you talk about clocks and chocolate. I had to dive deep into current and all the countries and how those different moves would actually create trading opportunities. And I had to explain that in like 5 minutes, right? If I had got that much time, right? So that was my job, and every Monday I had to do that, and so I'm doing that. I did that for a firm. I did that for the insiders at my Wall Street firm. I do it for you every day, posting in the school community. And again, if you're watching from YouTube and you don't know what school is, just come over to Elite Traders University School, become a member. It's just it's like cost of a cup of coffee per month, and you get access to wonderful articles written by me, of course. I started as an English major, a former junior high school teacher turned currency analyst, right? And then there's a classroom there where we have, if you're just brand new to trading, we have our baby Forex pips, very quick videos. These videos are like 1 minute. If you remember old multiplication rock and grammar rock, where you can learn all this. I learned more like multiplication rock than I did in school, right? It was like a little cartoon that came in between cartoons. And so if you can go through all this in about an hour, right? And you'll have a wonderful foundation in Forex, right? As far as learning about the jargon, pips and points, lot sizes, leverage, the charts and patterns, and all this wonderful things you can find out there. You also have, if you go back to the classroom, after you go through the baby pips, you want to go to the Forex Foundations. We include one of 81 videos in our Forex Foundation freshman course, which talks about margin, leverage, and currency crosses and types of trading, right? And what you graduate from there, we have our Samurai Sword strategy, a strategy put together from my million dollar client clients, they're graduates, right? And she created a course called the Samurai Course, a strategy course showing how to trade the opening range breakout. The opening range breakout, powerful strategy developed by Toby Crable. In fact, his book, if you look at his book on Amazon, it's like probably a $1,500 book. And you talk about the opening range breakout, powerful system that you can learn to trade and put it in and actually see immediate results, right? And after the Samurai Sword, you start making some money. Hey, now you may want to look at the Pip and Run Foundation course, which is we're loading up the videos there. And the Pip and Run Foundation course is designed to get you ready for for qualifications for trading, right? They get you understanding market structure and accumulation, distribution, looking at the different phases of the market and being able to read the market and trade with consistency. So that the Forex Foundation course is perfect for that, right? So, but to go back to our trading analysis there, um, letting your stops, telling what I was really happy about what I was able to do. That even though I have a few more minuses than I normally would have, what has changed, and maybe Jay will agree with me because Jay is one of one of my veteran traders in my VIP group, and basically when I was in a trade which was going in the wrong direction, to be able to cut it, be able to have a make or break zone, right? No, my mom and dad, we would drive across country and drive to Texas or something like that, or drive to Arkansas, and he wouldn't use a map, right? We had these paper things called maps. They were math paper. You guys remember those? Maybe. And we, ride in the back seat, and mom would look at the map, and my dad would look at the map. He says, I've done this 100 times, I know. And we're still wandering. We're like wandering Jews in the desert, not knowing, on the I-40 or the I-20, and we're at Las Cruces. We don't know where we are, right? And there's tumbleweeds and it's hot, and but he won't ask for directions, right? And so what would normally take us maybe 20 hours to get there, we want to get there in 25 hours. Why? Because he went in the wrong direction for a bit, and then he would get mad when are we there yet? No, right? So if we're going in the wrong direction and you start seeing that minus sign getting bigger and bigger, and I just like, hey, you know what? I don't like the pain. I'm gonna cut it, right? The pattern is telling me I'm not supposed to be here. I'm getting close to my risk tolerance. I'm going to get out. And even though I may be in the right direction now, here I actually went in the wrong direction, right? I actually tried to take a counter trend trade, and I think I was on the line with Jay when I said, you know what? I could take a counter trend trade, but I'll be breaking my rules, and that I'll probably lose money. And what happened? I took the trade, counter trend trade, took a sell, and I lost, right? But guess what? I quickly turned back around, and I don't think you can see that trade. Let me go ahead and see if we make it bigger. Control and plus. There we go. Oh, there we go. Yeah, so that $435, and why? Because I got stopped out on the buy, so I said, let me switch and get short, right? 47, 77, 21 long, didn't work. Okay, hey, this is going to go down. 47, 74 short, right? Did not work, right? But guess what? I got back once I was wrong, right? So I stopped, paused, waited, and then reversed in trade. And guess what? We made it back. 305.61. Then we're back in the flow of the market. We're able to get in and get out and get in and get out, right? There's a buy, it starts. I just took it. Like, look, I took my lumps. I said, look, I'm not going to lose $200 again. Right? Let me go ahead and tighten that up, right? And also, I just took one trade, and this was the Aussie trade, and this was a great trade based on fundamentals. We actually looked at the economic calendar. I'll show you how we set that up, right? I went to a tool that I created called My Market Heat Map, and it's arrangement of currency pairs by percentage change, and it tells us what's hopping, what's popping, what's dropping, and what's not. But it has a lot of other stuff too, and you guys can have access to it for free. I know it's $19.99 a month, but you don't have to pay that. Just scroll on down, and you get one of the heat maps there, and you have one of 6 powerful heat maps. We have heat maps for commodities, for all the forex pairs, for stocks. You have all these different types of heat maps. Green is up, red is down, and we can see pound, Aussie, Kiwi up, and look, the dollar pairs are all down. Really, real simple, green, red. Okay. So you just come to mymarketheatmap.com, absolutely free. Get one of the 6 heat maps. And then we look at the economic calendar, right? And so I went down the economic calendar, right, and see if I can go back in time and I can show you what exactly walk you through the process of how I found that trade. I went down here Wednesday, January 21st. We started trading. We started trading at 7 p.m. Eastern time or 1900. And we looked at the economic calendar and we saw all these Australian flags. And we kind of realized that, you know what? Using the economic calendar is another way of finding a good trading idea. I call it fund with flags. Fund with flags. And if you're a fan of the Big Bang Theory, Sheldon had a show called Fun with Flags, right? With it was a show within the show, Fun with Flags, and they basically talked about a flag, and Sheldon would sit there, and Amy would dress up as a pretzel or something, and I'll show you if you probably don't remember, but it's Fun with Flags. So Sheldon, one of the main characters, the Big Bang, would have a flag, and he would have Linderhosen or something, and she would have a pretzel or something like for. So I call this Fund with Flags. We look at the flag, and that tells us what to trade: Aussie dollar, Aussie yen, Aussie Swiss. This is in play. There's a countdown timer that tells us like when this was going to come out, and there's a few minutes before we got into the trade. The jobs number was negative 65.3 thousand. Forecast called for 30. Blockbuster, the full-time employment change came out higher than expected at 54,000. And what that did to the Australian dollar, it shot it to the moon. It went bonkers, right? And we were in that trade, and it took just a few minutes for us to actually to benefit from that. And let me go ahead and show that to you. We're going to trading and execution marks. Okay. And then let's bring that over here, right? So this is where we got, right? So this is our accumulation. What the banks like to do is you guys got to understand that the market is rigged. Everything's fixed, and everybody knows information ahead of time. In fact, you go to Thomson Reuters, I just showed you. Thomson Reuters, for a small fee, will give you access to their news before they release it, right? So they get access to worldwide news before they release it, right? If you ever watch Wall Street, the movie, Blue Horseshoe likes Endicott steel, right? So there's all kinds of insider trading, and the banks are forcing prices down, forcing people out to buy it back on the cheap, right? They look at buying back, but we saw that using our predictive function institutional order flow in Pip and Run, which is our proprietary technique for our system for looking at institutional order flow. The institutional order flow pressure drove prices down to set people out of the market. We got long on the pullback, right? And then they increased our position, right? And then when the news came out at 1930s, when the news came out, we were in it to win it before people could even recognize what was going on. We were with the banks. Remember, I used to work for a large bank as well, Bank of America. So I worked for a large bank and Forex Capital Markets. And so this is how the institutions play, right? While you're saying, oh, it's red candles, downtrend, lower swing highs and lower swing lows. Nah, the news is going to come out. They already knew the news was better than expected. And then it broke out. We were able to get out here and take out a big chunk of the market, move sideways for a number of hours. And so, when we look at the lower time frame chart, it moved sideways. But then it just started consolidating and breaking out, consolidating and breaking out, and doing that over and over and over again, right? So the trade that we took one. I just took one trade in that account. I took several trades in this other account that I can show you. But so we took one trade, 10 standard lots. I mean, when you know what's going to happen ahead of time and you've got pretty tight risk management, you can go large, right? So I went large on that, right? And so we're able to make $930 on that trade in not very long time. It took us 5 minutes to do that. We got it at 225, we got it 230, right? That was the only trade I took in this account, and so I said, it's because the account was at $9,000. I mean, you make 10% on one trade, why not? Now I know it says 122, but this is MT4 time, and MT4 time doesn't match US time, right? So the next day actually was the trade after that, and then I just spanked. We just did gold repeatedly, 840, 590, 1280, just small positions getting in and out. 811 got out 9 minutes, and so these trades, I took lots of base hits because I didn't want to get caught holding the bag where gold turns around and does a correction, and so we were on smaller time frames, and so we were just taking base hits along the way, right? For yesterday, which was Thursday, right? In fact, if I held on the 49.57 and we're at 49.80, that would be a big one too. But in total for the week, we did $2,444.70 in this account, right? And in this other account, the trading view account, it's not the trading, is not the brokerage, but it's the system we use. We did quite a few trades there, and I was doing the trades in parallel. So like the loss here is a lot larger than the one because this is a much larger account. But we closed out we can start from the bottom up. We have $80 base hits, 370, 150. We actually lost in the Aussie dollar position here, but then we got back in it. And then we got another one. What was that? It was like I think it got cut off. It was like $1,000 we made, right? We got back in and then came back and did it again, 123, 166. And we did this massive trade for 6.5, which was huge, 19,007, 161. And that one was an overnight trade. Actually held it longer than I expected. And it was underwater for quite a bit, right? The rest of these are scalps, right? And then last night, I had one position. I just let that run. The one that I didn't let run on this account, I took $1.60 on. Well, guess what? I made on this one. Come on. You won't. Okay. Yeah, made $101,000 on that one, right? So that was pretty good. So yeah, and then here I just this was a fat finger error. The price was rapidly moving up and down, and it looked green. It was green when I clicked it, and then I realized it flicked on me. I was trying to get like 2 or 3 pips out of that, and so these are fat finger errors. And if I had just held them, I wind up, I could have closed them out at a profit. Just a few minutes later, just got a little bit antsy, got a little distracted. I do a lot of teaching and talking when I'm trading, and sometimes when I'm doing that, I get a little distracted. So this error was really a distraction error. It wasn't an execution error. It wasn't a risk management error, because it was positive, and it just clicked out negative, right? These two were in line with that. The one that I lost, those two that I lost in gold, I made the same trade, right? And I was trying to go counter trend. I was short, and I closed right here. I closed. See, I was short, closed short position. I took two short positions and flipped it and got long, right, in line with the market, right. And the others were just great. Were good trades, right. So in this account, we're at 96% win rate, 7.27% drawdown. And I go drawdown. I do talk a lot about win rate. Win rate's very important. It's psychologically comforting, and Jay can probably agree with me to have lots of winning trades and tight money management. And too much, the myth that's going on in trading nowadays is that win rate doesn't matter. You can lose 7 out of 10 of your trades, and 3 trades can make up all the. Why are you losing 7 trades in the first place? Yeah, ask yourself. Does your system suck? Do you have a methodology? You know, I think we have low expectations, and because we have low expectations, what happens is we tolerate 7, losing 7, win 3, and happy. Okay, yeah, I made more money than I did, but you have people say, "Well, I want to be consistent. I want to be consistent." Well, how can you be consistent if you're losing 7 trades out of 10, but you make all your money on the 3, which is Wall Street lore, right? And some of the bigger hedge funds, even like the Medallion Fund with the Medallion Fund is the most successful hedge fund. You can look it up, and they only win 50% of their trades, but they use very high leverage, and then they have teams and teams and teams of a quant analysis, working, right? So 50% win rate, and they're the most profitable fund in the world, averaging 60% per year for the past 20 years, right? And all you have to do, and even with the turtles, they won about 5% of their trades. They had 95% losing rate with 5% wins, and still dominated the hedge fund market with triple digit gains over a 20-year span, right? So I'm introducing something a little bit different, which is win more, lose less, and make more money, right? And so it's a paradigm shift. And I know my mentor, Mark Douglas, probably was flipping over in his grave, but he was very excited when he saw Pip and Run back in 2004, when in its early proto stages, right? And so it's a great testimony that by investing in his training, it helped me develop risk management, and I invested in him. And I say investment because I've made many, many, many more times what I paid him. And back in 2004, as a broke teacher, $7,000 was a lot of money, right? It was, it's like, and my wife wasn't really happy about that, and it didn't seem to most people it was the most nutty thing. Why would you give this man this much money? What do you know about him? I know he wrote a great book. He was a broker at Merrill Lynch, and he's one of the foremost authorities on disciplined trading. Well, then, hey, I had a problem. I had a problem of inconsistency. I lost, tens of thousands of dollars, and I would gladly paid him $7,000 to stop losing $10,000 a year, right? So, and now making a few million now as a result of his training. Would you pay $7,000 to make $1 million all day long, right? We do that all the time. We go to college, and you might spend $50, $60, $100,000 in your degree with the hopes that you'll get a return on investment of a job that that won't keep up with the rate of inflation. But we do that all the time, right? So I know Jay and Lisa, she's going skiing in Japan, and I have people flying out. I have Rod from New York flying out, and and people are living their best lives because they can trade. They have the freedom, they have the flexibility. They saw the value in the training in Elite Traders University, and they were able to make that decision. So, if you would like to find out more about Elite Traders University, go over to elitetradersuniversity.com and go ahead and check out the masterclass, and that way you can able to. Oh, you can't see my charts? Oh, you couldn't see the charts. Oh my goodness. Okay. Oh, you know why? I said share screen, right? Entire screen, right? Screen 2, right? Oh, you saw everything? Okay, thanks, Jay. Yeah. So the week ahead, look forward to trading next week, and the gold silver trade is on fire. Save the silver money train. Woot woot! It keeps powering higher. But if you're trading silver, you're trading gold, and it's not working out for you, feel free to maybe set up a breakthrough strategy call with me. I'd love to talk to you and see if I can help you here about what you're trying, what you're doing, and maybe all you need is a tune-up. Maybe you just need to talk to somebody. And normally I charge $500 an hour for you to speak with me. But if you'd like to book a call with me, and then you can, I'm going to pop that in the chat box. You can book a strategy call with me, and this is 45 minutes. And this to try to get yourself realigned. This is the new year. It's not too late to make a resolution to be financially independent, and fire your boss, live your best life, or just if you love your boss and love your job, to have more money. Right? I actually love teaching. I loved my kids. I loved my students. I was a great middle school teacher. I was an award-winning middle school teacher. And the only thing was that the money wasn't there. And I felt trading, I could do it part-time and still teach school. And when that didn't work out, I just kept, I stayed on the trading path and still teach. And so I have the heart of the teacher. And so I'm living my best life. I enjoy my life. I enjoy what I do. I enjoy seeing success stories like my students. And I would like to make you my next success story. So if you do, click the link, and I'll see you on the other side. You guys have a great weekend. And we're going to go ahead and end it now, as I don't see any questions in the chat box for a Q&A. We'll go ahead and stop you here. Okay. Thanks so much. We'll see you next week. Peace and pips. Cheers. Bye-bye.